actually have a choice of what fund category to invest in. Do you invest in a mutual fund? Do you invest in a PMS, or do you invest in an AIF? Each of these have certain pros and cons. Um, there are three different types of investment vehicles. All basically offer investors professional management of their investment portfolios by professional fund managers. PMSs and AIFs are targeted more at higher net worth individuals, while mutual funds are suitable for all classes of investors. Each have their individual pros and cons. What is important is identifying what of these appeal most to you. Now, if you're looking at mutual funds and if you understand the pros and the cons, mutual funds support much smaller ticket sizes. They're a lot more tax efficient because when you invest in a mutual fund, you only pay tax whenever you redeem. There's no tax which is paid in between. It's the ease of operations is arguably the best. It's also possible. It's very easy to do systematic transactions in a mutual fund, either an SIP or a systematic transfer or a systematic withdrawal. And these are typically low risk, more diversified portfolios. There are a lot of benefits of mutual funds. However, there's certain kind of cons, especially in relative to a PMS on AIF. Now, lower risk does lead to lower returns. There's not that high level of differentiation, and a lot of more differentiated strategies are only available in a PMS on AIF structure. Very importantly, most mutual funds are large financial institutions where fund managers operate as employees. There is a significant chance of your investing in a fund looking at the past track record. But the fund manager who's managing that fund in the past and who had delivered that track record may actually be an employee leave for another job. And you are seeing this trend quite clearly where a lot of the highest quality fund managers in India are actually leaving to set up their own PMS or AIF. So fund manager stability is something which is not assured in the case of a mutual fund. It's also a little more targeted at retail customers. Coming to a portfolio management services or PMS. Now, PMSs offer more differentiated strategies. They have a much larger range of risk reward options. You have PMS firms which are very similar to mutual fund in terms of risk reward, and funds that could be much higher risk reward. Customized portfolios is sometimes possible. You have direct ownership of stocks. Stocks actually held in a demat account in your name. You are giving a fund manager power of attorney to transact on your behalf. Now, a lot of, especially the higher quality PMSs, you very often have a owner managed PMS. Now, what we basically mean is that the primary chief investment officer or fund manager is actually the owner of the firm. This gives you great clarity around longer term fund manager stability. A couple of the cons are that there's a minimum 50 lakh investment. There's also a slight tax disadvantage. What happens is in a mutual fund, you've invested only when you redeemed, you pay taxes that maybe 5-10 years later. Your taxes accumulate and are paid only at the end. However, in the case of a PMS, whatever transactions the fund manager is doing, any capital gains or losses paid that come out because of those transactions, you need to pay a tax on that each year. Now, it's not that the longer term tax impact is very different. In mutual funds, your taxes are accumulating and paid at the end. In a PMS, you're just paying the taxes every year, but you do have the operational challenge of paying taxes each year. There are a large number of lower quality PMSs, and which is why it's very important that you select PMSs carefully. And some of the more complex strategies that may involve leverage and shorting, etc., is not allowed in a PMS. That's only allowed in an AIF. Now, coming to an AIF in terms of the pros and the cons, unlike your PMSs and mutual funds, which tend to be in your more traditional asset classes, AIFs can invest also in these traditional asset classes, but you can also do much more. That entire alternative space really comes out. Highly complex strategies are possible with a very large range of risk reward options. Again, fund manager stability is really a lot more assured in the case of owner managed AIF. There is, however, a 1 crore minimum investment similar to a PMS. Taxes in an AIF are paid every year. There are different categories of AIF. If it's something called a Cat 3 AIF, the taxation would actually be paid at the fund level, and there's no taxes that an investor has to pay. If it's a Cat 1 or Cat 2 AIF, whatever the AIF has done, whatever income they have earned, that basically flows down to the investor, and the investor has to pay a tax. When it comes to the more complex strategies, it may sometimes be difficult to understand the true risk reward. And therefore, it's very important that if you're looking at a long short strategy at an asset yielding fund, you really understand what that underlying fund is doing.